Welcome back, y'all. Or if you're one of the 53% who are not subscribed, you know who you are. Welcome. We are Brian and Tom of the Dividend Dudes.
Today we are celebrating 3 years of doing boring videos of boring stocks making lots of boring. Hey, making money is not boring.
I don't know.
Anyways, we've been doing this for 3 years, and if you clicked on that video and you were wondering how you can make passive income and what that might look like after you've been doing this for 3 years, you're in the right place.
Per usual, here's our portfolio. How are we doing? Pretty good, it seems. We're up $68,000 and $210 in average monthly dividends.
What do you mean pretty good? We're like beating the index funds.
Yeah, it's
pretty
good.
It's really good. It's not pretty good. It's really good.
All right. Well, that does put us up around 5.5% for the year and a whopping 612% lifetime. We hope to continue this trend with this month's stocks purchase, and this month isn't entirely just reinvesting in stocks we already own. So Stick around and to the end of the video, and we have some channel updates for you as well.
As you may have guessed, we are talking about what we bought for month 36.
3 years. 3 years we've been doing this.
We've been doing this 3 years uphill both way in the snow to get our dividend checks.
Okay, let's not get all crazy now.
So we've been talking about a recession, and the stock market has been a little volatile with the Trump tariff war going on. There's more to it than that. And investors are starting to dip into the fear and loathing side of investing. Finally.
We can make some money.
A year and a half later. As you saw with our portfolio, we dipped slightly as well, but not really as much because of the defensive nature of our purchases. With this in mind, what did we pick this month? Well, here you go.
All right, we picked Intel. Yeah, I know we're big on Intel fixing their issues and turning the corner, and we keep pouring money into it. But honestly, we would put much more into it than the 1K that we did this month. But we also need to keep the portfolio balanced.
For you guys.
Right. For those who know, well, you know. For those 53% who don't, go watch our Intel video, which will come up in the corner here for you to click on. Go ahead and watch that and let us know your thoughts. Come back here and put it in the comments.
Don't do that. Troll us. Yeah, we're going to get trolled.
If you don't, put it in the comments. Just put it in an emoji if you don't want to, let us have it. Just, for engagement.
Brian wants the poop emoji. That's what he wants.
No, any your favorite emoji, which is probably the poop emoji. But anyway.
So we do a live stream, and in the live stream, one of the stocks that we were looking at actually stuck out to us pretty well. We dug into it a little bit deeper, and that brought us to our second stock purchase for this month. So for this month, we bought Hershey's. Why did we buy Hershey's chocolate? Well,
who doesn't like chocolate? I mean, come on.
If you don't like chocolate, what's wrong with you, first of all? Secondly, we get some trolls from time to time on our channel, and really we invest in like toilet paper stocks and now chocolates because we've been beating the indexes funds, and every single investment decision we've said has worked out the way we said it. So we're going to try to also capitalize on your tears. Keep them coming.
And seriously, if you don't like chocolate, comment in the comments section, and man, you better just go rethink your life choices. Seriously.
What if it's like a medical thing?
Okay, for those who can't eat chocolate because of medical things.
We are sorry if that's you. We're very sorry. You can just skip over that whole part because chocolate doesn't exist.
But for everything else, life choice.
So why Hershey's? Well, we've been looking at Hershey's. In fact, if you can go back to the live stream, we pointed out a couple things in the live stream that looked really good to us. Long term, this is not a buy today, get rich like today, get rich tomorrow. So Well, it is.
Yeah. Okay.
So Hershey's has been in a slump the past couple of years. They've dropped more than 40% at one point, and it has a lot to do with some of the restructuring they've been doing. They've been like modernizing some of their facilities. They had some IT costs in there, and quite frankly, people have been pretty down on the Dow stock. Like their revenue has been not so great. I guess people are trying to eat healthier. What's wrong with you people? Chocolate's good.
It's delicious.
Just don't eat too much of it.
Dark chocolate's good for you. That's what they say.
So of all the metrics in our portfolio, we had a spreadsheet we went through a few years ago. We thought people, we can show them this. They'd love to see it. Well, people weren't interested in that. So we still do that stuff. We still have all the financial metrics for assets and liabilities and earnings per share and dividend coverage ratios and all of that.
Maybe I'll go bring that spreadsheet up here and just for, history.
So Hershey's stock on all of those metrics, I mean, it was just nailing them left and right. Now, the market for 2025 is not in a good place. This is not an administration-only issue. Now, the administration is exacerbating some of the problems, but this has been building for years. We've been looking at this, we've been saying it, we've been talking about it, and we knew that if you say the sky is falling, after 50 years of investing, the sky will eventually fall. No, I'm kidding. We've been seeing this a lot. So if you check out our live streams, we talk about that. So
you're saying that the clock is right at least, or a broken clock is right at least 2 times per day, right?
That's exactly right, people.
Okay.
So this is a long-term play, and for our portfolio, we only have one other stock that plays in this space, and that's really Campbell's Soup. So we needed to add a second one to the position, one that we felt that had a good diversified set of products, for the most part, that would allow us to diversify in the event of a market crash. So we're not anticipating this stock is going to grow very, like, voluptuously. Is that a word? Can I use that word?
That is a word.
So we're going to use voluptuously. We're not predicting that it's going to do that, but we do think it's going to be in a healthy position as this turmoil in the market continues.
And we like their stock. More importantly, we like their dividend.
Okay, Roaring Kitty.
To recap, we feel these 2 stocks continue to position us well into the future when the upcoming market bubble bursts and there's another minor dip or recession and makes us more when it comes back.
It's bursting now, man. The sky's falling. We're all going to die.
We're all going to die. Now, the monthly dividends, currently at $210 per month, are getting to a point where we can solely fund this investment portfolio without us putting any more money into it, and that's something.
Soapbox. That's a soapbox. That's a soapbox comment.
There's a couple more years left of investing if we wanted to get that to the 400. But man, once we hit that 400, we wouldn't actually have to put any more money into it if we wanted to just keep it going, and it would still give us a lot of investment.
I'm going to soapbox right now. When we started this channel, we said we're going to do the leftover household income for the average household.
Which was $400 a month.
And for a year and a half, we did that. We invested about $400 a month. So we built this roughly $70,000, $68,000 portfolio from that. And already 3 years, so think about this long term. 3 years into it, we are making $200 a month, half of that investment amount, only 3 years in. Mm-hmm. If you are somebody who wants to learn how to make passive income, what does that tell you? That's a huge amount, because let's just double that number every 5-6 years. You are doing very well over a long period of time. So that's why we started over. That's why we created this. We did this for you. We've already done this personally. And quite frankly, if you just sit at home and play video games and the old rugged cross on the piano, it gets boring after a while. We want to make a difference in other people's lives. So we're hoping that you're finding some value from this, because we're going to keep doing this.
Yep, that's the snowball effect at work right there.
And if you're following along, talk to your financial advisor, have them jump on board, troll us all you want. We're going to keep going, and hopefully you find some valuable information out of this.
And we are not your financial advisors. We're just 2 dudes yapping our portfolio on the internet.
I could be.
No.
Why not?
Oh, maybe if we get our insurance and all that other stuff. And
oh, yeah.
There's a lot to go into that. Don't get us sued. Now, with all that said, if y'all have found...
Y'all?
Y'all. If y'all, I'm getting southern. Now, with all that said, if y'all have found this information informative, or y'all, I know I'm going southern on you.
Y'all.
We're
not even from the South.
Or at the very least entertaining.
We're like the top of the United States. Like, you can't get much further north than us. We're almost Canadian.
Almost Canadian. I should have went Canadian, eh? Go ahead and like, subscribe, hit that bell to be notified when other banger of video gets dropped. Also consider memberships as well if you would like a better way to support the channel and have the means. This gives us the opportunity to spend more time on the channel and bring more banger videos and better content to you.
Yeah, and as always, thank you everybody for watching, for the audience that has stuck with us since the very beginning. We appreciate you. We've been doing this for you, and Brian will not have your babies, but we do want you.
No, I will not.
No, you will not. But we do appreciate the fact that you've returned to us as we've learned this YouTube thing and have gotten better over time.
And as always, happy investing.